brokerages now, after this cuts and after this outcome of the board meeting, have been divergent. So IDFC has an underperform rating with a target price of 230 on Yes Bank. Macquarie believes that some of this is overdone, and they believe that Yes Bank could outperform. Their target price is about 425. Bullish, I might add. But yeah, so brokerage is very divergent on Yes Bank. But well, Yes Bank may not have been the bluest of the blue chips, but the recent sell-off has brought with it maybe a much needed correction in the valuations of some of the poster boys of the Indian equity markets. Now, what I'm trying to do out here is just bring out how the pullback has been on some of the top valued names since the start of the July series. The difference in the nature of the market is that it has not seen a correction in the underperforming names only, but also a correction in a bunch of blue chip names. So picture this, choose 3 or 4 large top of the line companies which are leaders in their space and look at the pullback that has happened in those names. Maruti, as of yesterday's cut, is down 18% from its peak. HUL, 8% from its peak. Titan, 20% from its peak. Bajaj Finance, 23% from its peak. And if you just look at what's happened, there is no earnings downgrade out here. There is no other correction, but simply a valuation or a P multiple pullback for, or in Bajaj Finance's case, a price to book pullback that has happened. This is Maruti's PE trend. And as you can see, that is a bit of a mean reversion for Maruti PE multiples from the levels that it was at to the level that it is right now. So significantly down, and it was, of course, quite high compared to what it is right now. Moving on to HUL, I mean, the stock, on depending on what earnings estimates you had, but on a ballpark earnings estimates had hit P multiples of almost 60. Look at this, what's happened to HUL as well as Titan. The white line is HUL, and the P multiples have corrected from northwards of 55 or 56 times to almost 50 times now 1 year forward. In certain cases, in certain analyst estimates, the P multiples had hit a level of 60. Now, these are very steep valuations compared to what the averages for HUL are. The 5-year average for HUL is about 46 times, 45 times. It had hit 60 times 1 year forward earnings. There's been a bit of a course correction. Nothing to say this can't deepen further, but it's come down to about 50 odd levels now. Titan, well, the market has been a lot more skeptical about the P multiples that the stock enjoyed. So after hitting 40 odd times or even northwards of that, Titan 2, the P multiples have come off and come off quite a bit. Bajaj Finance, price to book levels of 9 times at 2,985, which was the level at which Bajaj Finance had gone up to. The price to book, and again, depending on what estimates you took for the adjusted book value, had gone up to almost 9.5 times. That has scaled down to about 7.5 times as of yesterday's close. So there's some bit of mean reversion that is happening in the multiples for some of these large names. And it's not restricted just to the nifty names, by the way. Even at the mid-cap end of the market or the non-nifty names, a clutch of these darlings have come off and come off quite rapidly. Escorts, the poster boy of the tractor space. People spoke about investment in Escorts versus an M&M to that extent. That stock is down 35%. Godrej Properties, real estate company that could do no wrong, is down 35% from its highs. VIP Industries, massive move. The management saying that they've seen the best times for the business since 1990. That stock is down 22% rather. MRF is down about 20% from the highs as well. Stocks like Symphony, Delta Corp, Motherson Sumi, all of them leaders in their individual pockets, have corrected at least 20%. In the case of Symphony, about 45%. In the case of Delta Corp, about 30% from those highs. So the correction has been steep, and the correction is making sure that the poster boys of the large, mid, and the small cap space are now getting punished as well. Some bit of valuation correction coming in. Keep in mind, say for Bajaj Finance, I'm not highlighting any of the other NBFCs because those have reasons for the fall as well. There are business dynamics that have changed. But for a lot of others, it's not just a change of business dynamics, but purely a P multiple contraction that's led to these stocks coming off.